Hello, and welcome to Front and Center. My name is Scott Ziegler. I'm with New England In-House and Massachusetts Lawyers Weekly. We talk about business matters from a legal perspective. Today's topic is an update on litigation versus insurance companies over payment for business interruption claims due to COVID-19. And joining us today is Frank Licata, president of Licata Risk Advisors. And for those of you who do not know, Licata Risk Advisors were voted #1 in the risk advising category in the 2019 Lawyers Weekly Reader Rankings, #1. Before we get going, it's important to note that Licata Risk Advisors are not brokers. They don't sell insurance. They advise companies and organizations like yours on how to get the most out of their insurance policy, what coverage is needed, how to best protect your company against anything insurance related that might come up. That should be your #1 takeaway today, people, that you're probably not covered as well as you think you are, and that Frank Licata is the guy to talk to about this. But Frank, do you want to talk more about the benefit of advising versus brokering?
Well, thank you, Scott, and it's great to be with you. And by the way, I just want to say it's an honor to achieve that ranking with Lawyers Weekly and in-house
New England In-House, Frank.
New England In-House.
There we go.
There was something there. New England In-House. So thank you for that. Just on the insurance advising versus brokering distinction, I just want to say that they should not be confused in any way, because we are on the other side of the transaction. So we represent clients, understanding risk, negotiating terms and conditions, helping with claims, which is our subject today.
So, Frank, let me ask you this, and before I do, let's tell people that we're going to keep this down under 10 minutes because you're going to get great points and great information, and when you need more details, you contact Licata Risk Advisors. But my #1 question is, should companies file business interruption claims even though the insurers say they are not covered?
The answer is yes. You have business interruption insurance. You've suffered a business interruption. Wow, have you suffered a business interruption? And so you submit a claim in the insurance industry. In general, the industry position is the coronavirus is not a covered business interruption claim. So, we need to ask, why not? Well, they say the policy actually is a contract, and it's got its own terms and conditions. And one of the terms is you need direct physical loss or damage, such as would be obvious with a hurricane. Is it that obvious here? Well, maybe it is. And also some policies have a virus exclusion. So, those are two totally separate questions. Some policies don't even have a virus exclusion. So question is it covered? And, that's not the end of the story.
All right.
Yeah.
Well, can you give us the status on the regulation and litigation surrounding this issue?
On the federal level and the state levels, there were a lot of movements on kind of stepping in to encourage insurance companies to pay these claims. Now that, and the PPP program does overlap with business interruption in many ways, especially the way it covers payroll. So now that the PPP has run out of money, I expect those state and federal movements to revive and accelerate. Interestingly, the insurance market is a global market, and in the UK, there's the FCA, the Financial Conduct Authority, which regulates insurers. Now, they have just made a request to the courts for a determination of business interruption coverage under these policies. And the language they've used is they've asked for a declaration on an agreed and urgent basis. So So on the regulatory front, a lot of things are happening, and we may get if we got a statement from the UK on that soon, that would help quite a bit. As far as litigation goes, as of yesterday, there were 72 cases against insurance companies and/or related to business interruption in the state and federal courts. And some of the cases are direct against the insurance companies. Some are requests to the court for a declaratory judgment. So some of those declaratory judgment decisions might come a lot quicker than the other cases.
Mm-hmm.
But given all of that activity, you're going to see something happen. You could have insurers are going to be deathly afraid of a precedent being set in court. So you may have see some settlement offers, which will leak out,
Mm-hmm.
or you may have an opinion from the court on the coverage, or an opinion from the UK court on coverage. And with all that movement, but insurance policies there's an insuring agreement. There are exclusions, conditions, limitations, very importantly, definitions. A lot of hairs are being split right now in these cases as to what direct physical loss or damage is. And secondly, there are a couple of other points on the virus exclusions. There are many state endorsements which were mandated by various states to remove the virus exclusion. In fact, on half of our clients, we have the mandatory endorsement removing the exclusion. So the question is, what we're investigating right now is why, if this is a mandatory endorsement in a state, why isn't it on every policy? That is the state endorsement removing the exclusion. So that is an area that's being developed right now. So many different ways this could go. And there's another principle that the lawyers in these cases are using. It's called reasonable expectations.
Sure.
Now that's a big one, and the insurance industry must be fearing that a bit.
Right. Well, that's a perfect segue to my next question, which is the insurance industry says they can't afford all this. So it would be like a tsunami wiping them out.
Yeah. Well, I wouldn't worry about it that much. The insurance is a pooling mechanism. Normally it's spread, premiums from many companies come in and are used to pay the claims of the few who suffer. In this case, in this case, everybody is suffering. So spreading, what the insurers fear is that there are too many claims coming in at one point. You're going to exhaust the pool. Yeah, but however, you can be spread horizontally across many companies and also vertically over many years. So, and the massive size of the insurance industry, the industry is not going to be bankrupt. I'll just give you a few stats just to indicate the size of this industry. The surplus of just U.S. insurers, surplus being cushioned over and above paying claims, is $802 billion. And worldwide, cash and invested assets worldwide, 8.3 trillion. So an insurer or two may become insolvent, but the industry is going to be fine.
All right. Let me throw one last question at you.
Okay.
The biggest question of all. What is your bottom line advice, Frank?
Bottom line, file a claim. There is no cost to filing a claim. Put a stake in the ground that way. Be ready. When something breaks, either on the regulatory front or the litigation front, we will be ready to prosecute that issue. You don't want to be scrambling at that point and saying, I wish I filed the claim. Do it now.
Well, that's the bottom line. And Frank, I think you've done the near impossible, which is to make talk about insurance compelling and interesting. So again, thank you, Frank Licata, President of Licata Risk Advisors, for joining us here on Front and Center. what's the best way for people to find you?
LicatoRisk.com. LIC as in Charlie, T as in Tango, risk.com.
Fantastic.
Look forward to speaking with people about this and specifically about this issue. Be happy to help.
Okay.
Happy to help. Thank you
Great.
very much, Scott, for
Thank
today.
you, Frank. We'll see you soon.
See you soon.